morning, GPBOptionMillionaires.com. It is a Monday. It's November 17, 2014. The dollar-yen cross hit a new multi-year high last night, just before the GDP number came out, and then significantly pulled to the downside 150 pips before recovering here, and we're getting back up. And you've seen this throughout the lows that we saw back in March 2009, where every dip gets bought. And to look at this dip, here we go, the dip, the panic sell-off, and then it's like, oh, yeah, we're just going to keep printing new yen and devalue the currency significantly like they've done since November of 2012. You can look the move it had off its lows. I mean, the low was really just at the end of 2011, and here we are, November 2012, Abenomics comes out, and the yen's just been getting demolished. So we'll see if we continue that pattern. I mean, if you go back to 98, look at a 146 versus the dollar, the dollar yen cross, and then you look at a nice head and shoulders pattern. Look at this head and shoulders pattern. It actually worked very well. And then in 2007, just before just right at the top of the stock market, we hit about 125. So there's a lot of room to go. I saw an analyst come out recently say 145 versus the dollar. So we'll see if that comes to fruition. That would probably lead to higher stock prices. Futures again are pulling back, but this is a long-term chart. Every dip remains a buying opportunity. We've broken out of this long-term channel here. You can draw a trend line here and a trend line here. And if you go to the blog at optionmillionaires.com, talked about this, and you can look at the action that we're having here off the GDP number, the recession in Japan, and then we're just kind of, hey, shrugging it off like we've done every other excuse to sell stocks. We just briefly breached support here at the 2027 level here. And yeah, what would you expect in this market where every dip gets bought? We have crude oil falling, which is good for stocks like FedEx. Crude oil is down almost 1%. Look at a stock like, well, Baba hit a new record high last week, continues. FedEx also new record high, consolidating here. They ship a lot of stuff, so if oil's cheaper, guess what? Stock's going to get higher because the price to ship those goods is going to get cheaper. 3M, after its earnings report, has just been on a complete tear to the upside. How about Apple? And I don't change any of these trend lines. I was talking about this a long time ago with Apple back in May of 2013. How it had a nice W bottom, and I was pointing out these patterns here. And you can see the explosive move it's had to the upside. This is indeed the third leg that we're seeing to the upside for Apple. Congratulations to longs there. Let's look at Google again. Google remains entrenched in this narrow range here, and right at this 550 level. This is where, and we've got also trend line resistance overhead here at 570. If we can break above this, I really think we're going to head back to $600 on Google. We have USO. So I was just pointing out crude oil futures. USO right to the underside here of long-term support. It's now acting as resistance. So if you can't get back over that, this is going to look pretty bad here in the long term. Let's pull up a 20-year chart. You can see what I'm talking about here. This long-term channel. It's been confined in since oil was supposed to go to the moon. Even earlier this year, we had this crisis in the Middle East that was supposed to send oil over $200 a barrel down the road. Not going to happen, at least not yet. All right. And same thing here we're seeing with the gold miners, GDX, broke through long-term support, and it's just looking pretty dire here for GDX, gold miners. We have earnings reports out. We have Dick's Sporting Goods this week. You can see it's in this beautiful channel here, so you'll see if we can get to the top side of this. I'll do more of this in another video. I just want to do a quick market video about where I think the market's headed. And again, it's very simple here. The trend remains your friend to the upside. I don't like this rally any more than anybody else that's trading against it. But guess what? We're all here to make money, and the money has been made to the upside. Whether or not you agree with the Federal Reserve and Ben Bernanke, Janet Yellen, Mario Draghi, Abenomics, they've been printing money hand over fist, supporting asset prices, and the place to be is long stocks. That's it. Until that changes, which it might not for quite longer than everybody thinks, because nobody thought this was going to last this long, aside from a handful of people. So let's just keep an eye on the trend here as long as we hold it. And even if we pull back here, 200 would be support. This is the Abenomics trend line. I think this is going to work for quite a while. And then once that breaks, if we don't get that V bottom, these V bottoms are working great. And actually, The V-bottom that we saw recently into the middle of October was one of the sharpest V-bottoms we've seen in quite a while. And you can just see how resilient this market is. It just, just take an eraser and just erase that. So, all right, UPB here, optionmillionaires.com. I'm going to do an earnings video. I just wanted to do a quick market outlook here. We have stock prices pulling back here, but again, the trend is your friend. And if you look at S&P 500 futures, they're off their lows. They look poised to get back up to the levels that we started the overnight session with before the GDP number came out for Japan. Recession, come on. It's ironic, isn't it? Japan's in a recession, its stock market is at multi-year highs. It's pretty ironic, don't you think? All right, UPB. I'll see you in the chat room at optionmillionaires.com. Everyone have a great trading day. Goodbye.